Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over the whipsaw action that's just been on the charts as we do consolidate sideways, which some people, I guess, they hate to hear that term, but that's what happens when you have contracting volatility. You do get that just consolidation and kind of contraction, right, into this kind of wedge that we're forming on the charts. And so that's basically our sideways action until that compression gives way to an explosive expansion of volatility, which could be either in the up direction or the down direction. Since volatility is neutral, that's why we measure factors such as the position of the Stokes, how our momentum is doing, what does the price action look like, and of course, we just want to figure out what gives us the most statistical likelihood of going in one particular direction, since nobody can be a fortune teller. And anyone just trying to, call that it's going to go up or going to go down, they are pretty much idiots, because it's going to have some type of statistical likelihood, and that's going to be dependent upon conditions, validations, and confirmations. Otherwise, you would earn your money before you even traded, right? Because the market would be able to see the same thing that Nostradamus over there calling the shots, saw. And so they would have just priced it in from the very beginning. But of course, you only get the payoff at the end of the trade. And that's why we use statistical likelihoods. So guys, let's go over into the chart, and let's just throw on our key levels, because these are the key levels to watch for Bitcoin as we watch, the price action just compress and compress into this wedge, which has enormous whipsaw action as it's bouncing between the floor and the ceiling, which is getting tighter and tighter into this, just a tiny little corner, which appears to be attempting to wait for the monthly close, for the stock market to choose a direction, and also importantly for the US dollar to pick a direction. So, Bitcoin has already taken an enormous shellacking, guys, right? And so the guys who are diamond handing at these levels, the guys who are accumulating at these levels, they don't necessarily just want to sell at a whim anymore. We've talked about this. We've looked at the alpha origin channels, right? We saw that we are now officially at pretty good DCA levels. And one thing that I pointed out, it was definitely me who pointed this out several weeks ago, is that we have these CME gaps just over our heads. And so if we did end up having a breakout, those are likely targets for us. Additionally, I could not recommend to buy above the $30,000 level. But as long as we're underneath that $30,000 level, and especially if we're underneath the $20,000 level, then it's just logical, guys, that we're going to come back up and fill this CME gap eventually. So any risk that you take from here on down is just based on likelihoods. And again, not financial advice. This is me giving myself a pep talk, right? Me talking to my close friends and family. If anyone else should benefit from it, good for you guys. But, please consult your own advisors. But just saying, any risk from this point down is likely to be met with the reward of at least coming up to satisfy and fill the CME gaps that we have on the chart, one being around that $28,000 level and another being around that $35,000 level. And so these gaps tend to get filled in almost all traditional markets. And so, seeing that Bitcoin is now traded on professional markets and that it has CME gaps, those are likely to be filled in the future. And while we can't say how long you would have to hold the asset for, it could be a week, it could be a month, it could be a year, right? Eventually, those gaps are likely, because we talk about probabilities, to be filled, and therefore the proposition of holding Bitcoin at these lower levels, especially under the key level of $20,000, is a good proposition indeed from a risk to reward standpoint, as long as you're using discretionary income, as long as you're using money that you wouldn't have been needing for your day to day life if there was some type of financial crisis, if there was some type of recession, if you lost your job. This is a risky asset class. So, guys, with those things being said, we are starting to look at potential bullishness, even though we are headed to the downside. And this is, contrary to the rest of the market. But like I said in yesterday's episode and the day before that Bitcoin appears to be setting up for the upside, and until it breaks key levels, I can't be super bearish, okay? I know from a horizontals perspective that 20K is that magic number that a lot of people like to hang on to, but I use a different statistical method. So first of all, let's start from the higher time frame, and we can see that we are not bullish on the macro. Okay, we are not hanging on to anything that we need on the macro. So let's look a layer lower, right? To perhaps instead of the monthly or the weekly, to perhaps the 5 day and the 2 day. And for the 5 day and the 2 day, previously we were not satisfying conditions and in fact, we lost them quite dramatically in order to have bullishness on the 2 day or the 5 day, which have the which had the same closing dates last week. And so, of course, for even for the medium time frames, we could not be bullish, but we did maintain levels necessary to hold on for one more day, hold on for one more day, and hold on for one more day by meeting the critical levels at the daily. And currently, what I'd like to say is that we are, in fact, above key levels that we would need to hold on the daily once again. Both our MACD and our Stokes, as well as our RSI, are all situated above these key levels. So if you use my blue box here as as kind of a note, as long as we hang on above the top of that box, we are pretty much golden on the daily, and we have until the bottom of the box before we really start seeing some key weakness, some key cracks in our levels here, right? So that would be the top of the box is 19,400, the bottom of the box is approximately 19,000, and then we will lose all of our momentum to the upside on the daily if we lose 18,000 600, let's say, okay? And we are additionally going to be satisfying conditions for bullishness on the 2 day and the 5 day if we are able to hold above, let's say, 19,100, and that will be more or less secured if we're able to close on the 2 day and the 5 day, which do have more time before they're closing, to above 19,600, okay? And then from there, we might be able to sneak just a couple $100 above that in order to talk about the weekly at a later time. Now, guys, you understand my philosophy on this thing. We are so close to our macro resistance that it's not necessary to be playing this level right here. You are far more likely, right? To be, rejected, 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 and perhaps rejected again if you are entering a position right here on this macro downtrend. You guys are just acting like gamblers, right? Kind of these gambler, addicts, almost like an alcoholic, addicted to gambling crypto. If you are entering positions in this red zone on our macro downtrend. And I'm sorry to put it so bluntly, but you guys are just pure gambling at levels this close to what's a proven macro downtrend resistance line. And it's really a zone that we are inside of. That being said, guys, I cannot be bearish on the daily or the 2 day, right? And perhaps not even on the 5 day unless we violate this zone. So I really do need to see us getting under 19,000 before I really start doubting this market. And so that's your key levels for Bitcoin. If we throw on our EMAs, we can get a little bit better of an idea of what we're looking at here. Oops, let me turn off the drawings. And you can see that on the 4 hour, we do have a bit of a bullish structure here, right? Nicely above the 9 on the 4 hour. On the daily, we are above the 9 and we are in between the 21, which is starting to flatten and maybe even could turn up. And so this would constitute the beginnings of a possible squeeze play. We saw something like this happening right here, and it ended in a nice pop up. Of course, this was a totally different play, which the Alpha Fam did manage to capture. But this one is in even nicer formation. Let me see if I can find something more applicable. Yeah, right here. You see this squeeze play right here. This is what the sort of formation that we are starting to put in. And if we can continue with our EMAs, then that might be a nice pop-up, perhaps somewhere to $21,000, right, as we meet that macro resistance, perhaps 20,500-ish, right? It's just something in this ballpark. And if we get above those numbers, then we're starting to talk about, macro bullishness because we will have conquered the weekly 9 EMA and we will have entered this green box. So, you can choose the risk that you want to apply. Are you just a hardcore gambler? Do you enjoy losing money? Then please, by all means, feel free to enter at resistance, right? Like a degenerate alcoholic or gambler. However, if you would prefer to wait for a breakout to get above that key level of 20,000 that guys like Mitch Ray, just obsess about, you're like 1 foot beyond, below the line. Suddenly he's super bearish. 1 foot above the line, you're super bullish. I mean, it doesn't really work that way. There are lots of variables in terms of momentum and volatility. And so I will say that we do have a good setup. So right now, I would consider that bullish zone is actually extending. We might think of a horizontal as just like a fixed line, but the dynamic system is allowing for the possibility of bullishness as low as 19,000. So guys, watch that space. We don't want to lose 19,000 in terms of like setting multiple 4-hour candles below there. Otherwise, it could imply that volatility is going to squeeze to the downside. And when I talk about volatility, you can see I've been monitoring this daily volatility for you, and we are starting to pinch off. And as soon as we pinch off, we're going to have a new, volatility moment, which can either shoot us in the, shoot us up or shoot us down with high volatility. Now, you guys may say, oh, he's just saying up or down. Yes, but I'm talking about coming off of major contraction in volatility, right? And so we're talking about that compression. We're talking about that, consolidation, which can lead to an explosive move. And these are the things that you want to capture as traders. And so understanding the momentum in the system is critically important, and the key levels that go along with that momentum. So guys, again, above 19,000, I'm optimistic. Above 20,000, I'm very optimistic. Above 20,800, like, this is as optimistic as I can get. And then of course below 19,000, I'm starting to get quite worried. Below 18,500, I'm very bearish, guys. Okay. And then, of course, we do have, lower targets if that does happen. But guys, let's go ahead and jump over to, well, you know what? Since we're looking at our EMAs, let's go ahead and just see what the weekly looks like, just so you can get an idea. On the weekly, we are, not even hanging on to the 9 EMA. You see, we're well under the 4 EMA. And so there is a lot of work for macro bullishness in order to come to fruition. And the dramatic nature of these EMAs pointing down here, right? This 21, this is like almost straight down, guys. This 9, it's almost straight down. Only the 4 is starting to round. So there's more work that needs to be done. And I'm not 100% convinced that this is going to be the payoff move, but we are watching that. And as that daily momentum does compress, over the next few days, maybe even over just the next day, then we're going to get some type of signal, probably like this or something very similar, that we can pay attention as we come into October, right? And get this nasty September done with. Guys, let's go ahead and jump over to the CME. And on the CME, you can see that our volatility is already on the floor. So the professional exchanges are setting up to be ready for that move. But what you see on our EMAs is that we're really testing the bottom of that squeeze play, and we are in danger of losing that. So don't forget about the CME chart. We are seeing the 21 start to curve down on the daily, and we are stressing and bending the 9 and the 4 here. What we don't want to see is a breakdown, and so let's just go ahead and turn on our key levels. And sure enough, you can see that my blue box, it does have a nice range to it, because we do have a momentum zone all the way down to 18,800. But if we lose 18,800 on CME, which is a bit higher than on the 24/7 exchanges, we are going to lose that daily momentum, and bias will be strongly to the downside. As long as we're above 19,000, however, we do have that nice bias to the upside. Just we're meeting the minimum conditions for that. And if we're above 19,600, we're actually meeting pretty strong conditions, which can then get validated by several 4-hour closures, or perhaps a daily closure, which then would perhaps confirm the move for us, and we'd also be above our weekly 4 EMA. But guys, not to beat a dead horse, but also on CME, we are extremely bearish on these EMAs. And the one thing that we have going for us is that we haven't really checked back to our 21 in a while. And so we do have the 200 and the 21 up here. And checking back to either of those wouldn't be so bad, even if we did have continuation to the downside. But this thing could easily just slop over. You see how these things fall down, right? You don't want to be under the 4 for too long. It starts to just pour down like a waterfall. And so it is nice to see this blue candle here on the weekly, and let's hope that we can pop above the 4 enough to give us a little bit of a grounding over the coming week. Guys, Ethereum's key levels. Let's just go through this pretty quickly. I want to try to make a little bit of a punchier format. So, guys, the key levels for Ethereum, effectively here on the daily. Let's go to the 4 hour just so we can see structure, right? For the daily, we really are going to want to maintain above 1340. Okay, we do have a tolerance all the way down to 1266, under which I think we're just going to lose pretty much everything. And so I would like to see us above 1330, 1340 on the daily close, preferably above 1350. Okay, closing above 1350 would be a solid bullish indication. However, we do have the 2-day and the 5-day having dipped pretty far down due to the weird whipsaw action that we've been having. And so the levels that we need to maintain for the 2 and 5-day are essentially 1330. So again, guys, that 1330 zone, very critical for ETH in terms of maintaining moderate bullishness. And if we could get a closure over 1350, that'd be very bullish. Under 1260, I'm just fairly pessimistic. And in terms of ETH's EMAs, we can see here, let's just turn off my drawings. You can see that we're just barely skirting by. This looks okay, but it's not the best, right? It's not the best formation. Really, you wanted to get in here in that 1250 area, but it's just it could really go its own way on this one. Let's go ahead and look at the daily, and here you can see a little bit more why it could go its own way. While we do have a nice little consolidation here between the 9 and the 4. There's no decisive angle to it, right? I mean, the 4 is pushing up, but the 9 is still pushing strongly down. And so this is in a battle to see which direction will win. And of course, if the 9 wins, then we're just going to slop over quite dramatically. And if the 4 wins, then we're going to potentially get into a squeeze play between the 9 and the 21. So ETH just not looking as strong as Bitcoin. If we go over to the weekly, again, just dramatically under the 4, not even close to the 9. And so this thing is in danger of slopping over. Again, just like Bitcoin, if you're underneath the 4, you can just slop down just like a waterfall. So it is nice to see that blue candle off of the 200 simple moving average. We did get a nice bounce off the 300 simple moving average. Now we're getting a bounce off the 200 simple moving average. And hey, maybe we can get a bounce off of the 200 exponential moving average next. Who knows? But guys, just watch this space. We are holding for right now. But again, ETH even looking a little bit weaker than a Bitcoin at this point. Let's go over to ETH CME, and we do see just the same pattern on the CME chart. Looking at the daily here, yep, same type of indecision. Yeah, I mean, again, like this thing could be okay, but we could just end up putting in a little form like this where we just slop over. So really want to get above that 9 as soon as possible on the daily. But for CME on Ethereum, our key levels are effectively just for a moderate chance at bullishness, we want to hold above 1340. We would prefer to close above 1350. and kind of a minimum threshold there is 1326. We do have our dailies, which would be lost at 1300, and then the 2-day at the 1280. So those are your key levels for Ethereum CME professional exchange contract. And of course, if you just want to be really bullish, like super bullish, then if we could get over 1400, that would be a weekly potential for a squeeze play, right? So something to pay attention to. And I seem to have some of my EMAs crossed here. Let me take a look. Yep, the 4 should be down here, and the 9 should be up there. Just misread that. And guys, so those are your key levels for Ethereum. Jumping over to stocks, we can see that, of course, that weakness divergence that I was pointing out in the stock market continues to play, where we do see that that kind of half-assed attempt at filling a gap just ended in failure as we continue to lose the 9 on the daily on S&P mini futures ES1. So if you guys are looking at SPY, if you're looking at the SPX or whatever for your S&P 500, you can find generally the equivalent. But just for the key levels for the S&P 500, in order to be bullish on the daily, I really want to see a close above 3730, a close above 3750 would be much better. We do have a momentum zone all the way down to 3630, under which I'm just going to be extremely bearish, and probably we would have continuation to the downside. For the 2 to 5 day, we are going to be just barely hanging on by a thread at the 3680, and then if you really want to secure some territory on those medium time frames, then you're going to want 3860 and 3870, with higher time frame bullishness coming at 3900. Moving over to the Nasdaq. Nasdaq pretty much has the same thing going on. We just have this really bearish engulfing candle to the downside, as that gap was just filled, but at the same time, um, it just lost. It looked so weak yesterday. That's what I was trying to point out, guys. Crypto actually looks stronger than the stock market. So we're gonna have to see where that divergence leads us. Does the stock market drag a crypto down, or does a crypto actually do something different than the stock market for once in its life, And but the stock market is looking fairly bad. If we do look at the daily, you just see that we've lost not only the 9, but also the 4 on the Nasdaq. Of course, this is the E-mini futures, the NQ1. If you're looking at the QQQ or the NAS 100, or the or some of these other Nasdaqs, then of course, you can find your own equivalent. But again, we really, for the daily bullishness, we want to hold above 11,530, preferably 11,560. If you want to be pretty bullish, then you're going to want to look for 11,650, 11,880. And then for macro bullishness, we're really going to be looking for above 12,070. We're quite a ways away from there. And again, if we lose 11,170, I'm going to be very bearish on this asset. The 2-day has some chance above 11,330. So if we do get a little pop up here, and especially above 11,340, then our chances are just a little bit more extended than if we're hanging out at our current level right now. Guys, let's just go ahead and just take a look at some of these EMAs on the weekly, because of course I was pointing out in previous episodes that stocks were hanging out above their 200 simple moving average, and also had previously bounced off of the 200 exponential moving average. So, guys, there's something to these, moving averages, and this would suggest the possibility for a bounce. But again, like I said, it's now or never. This is make or break. The next level down is basically this 300 EMA. Of course, if you're going by fibs, you can look at that too. But these things tend to drop in this sort of a fashion over time. So not looking great on the S&P 500. Same story. We're now testing the 200 simple moving average on both the S&P and the Nasdaq. Of course, the S&P was looking a little bit stronger over the last couple days, but it has joined the Nasdaq in that little extra bit of a bearishness, having lost a level. Looking at the 20,000 mile view, or whatever the heck, 20,000 foot view, we can see. Let's see, what else do we have up here? We can see that we could continue down to this golden pocket, which, depending on how you measure these things, could be pretty typical numbers to bounce off of. Even if we do retain some type of a bullishness in the market, we do have, potentially a ways to go, as much as 25%. And so, pardon me, I'm just flipping through these different charts that I have set up just to see if there's any insight that I can give you. But no, that's pretty much it for today. Just going to talk about that if we do lose this area and we do fall down to that 300. Oh, wow, I just noticed that the 300 simple moving average lines up perfectly with that target that I was suggesting. This green box right here on the S&P 500, this is based upon mathematics. Okay, this EMA is doing a totally different mathematical, algorithmic calculation. This green box is something that I personally calculated using price over earnings ratios regarding the possibility of the U.S. having a recession. And so if we do come down to this green box, we could find we're bouncing anywhere inside of here, and this could be the level, if we do continue down, that we end up bouncing out of. And that could be our first real chance at a bottom of the market if we don't hang on right here. And so, guys, with the 300 simple moving average in that area, that gives me a little extra confidence that that could be possible. Now, the further depth on the chart down here, that's just in case of a global financial crisis, banks failing, those type of things. Then, World War III, when it, blah blah blah, all of that scary stuff, right? This is the probable path. If we do, within the next half year, have some type of global crisis, then we're probably to continue down this way. But if things just start picking up, if the dollar turns around, and if we have, some type of fourth quarter that has a nice bounce due to the elections, right? Due to different macroeconomics, then we could get a bounce up here, and then we could delay this fall, or we could even have a double top and then have a fall later on. These levels are likely to be checked out later on in time, and this is purely a demographical thing. There simply are not enough Gen X, and Gen Y is not spending enough to replace all of the the stuff maximalism of the boomer generation and the gigantic size of the boomer generation. The world economy just cannot sustain that, or pardon me, the American economy just cannot sustain that. And as we enter a period of contracting globalization, whereas the boomer generation was all about hyper globalization, as we're having contractions in globalization and more nationalism, what's going to happen is that markets are slowly going to shrink. And so that's why we can get, a flat stock market for perhaps even 10 years until demographics can catch up, because of course that generation Y, that generation Z, did increase in a population size, and and so and then as the boomer generation passes away, they'll be passing on their wealth, and so it might take 5 years, it could take 10 years, but as these processes uh, go into play, then you're going to start to see those kind of minimalistic generations start accumulating the way that boomers and their parents did when the U.S. was in just a state of hyper growth after World War II, right? So guys, the world is much more competitive. It is contracting right now. It is getting a little bit scarier right now. So markets, aren't likely to break their all-time highs for a while. And so even if we avoid falling to hell, we could just double top and then try for the bottom again. And the next couple years could be a little bit of an up and down kind of consolidation, building in a platform for that next boom generation, right? For Generation Alpha to have that nice boom in their lifetime, and hopefully, the rest of us make it through it relatively unscathed, and hopefully we're able to accumulate something at the bottom so that we have something for ourselves as well. But once those demographics straighten out, then of course the next generation is probably going to have a growth period, even if unfortunately Gen X and Gen Y, millennials, unfortunately they are facing a contraction generation. Okay. Guys, I think that covers Bitcoin, Ethereum, the stock market. Let's take a quick look at some of our risk factors. We do see the DXY, the US dollar, just respecting my levels, right? Respect the levels, guys. We haven't seen any type of rebound. Now, this is still possible, but as we breach that 9 EMA on the daily, right? This is the thing that I was telling you that we need to watch for. As we start to breach that 9 EMA on the daily, which I do believe we're actually doing, then most likely we're going to squeeze to the downside along with this pressure on the 4 EMA. And, this is kind of algorithmic, right? So there's bots, there's algorithms, there's day traders and all of that stuff. And they're just going to want to sell this asset as that squeeze is in play. Now, when we have a little cross here with the simple moving average, we could get a little bit of a pump that might be a fake out, or it could turn us around. So just watch out for where this thin red line, this simple moving average, crosses the 9 EMA, because that could be a reverse alpha 9 knockout. It could be some type of a punch up. So just watch out for a possible fake out there, or this shift where we just turn around and come back up. A lot of that will have to do with the EU's policy on their currency, the Japanese policy on their currency, and of course Britain's policy on their currency. So, guys, we are looking for this pullback to perhaps give us that little bit of a punch to push Bitcoin's volatility to the upside, which then could carry along the rest of crypto. Guys, the VIX is just hanging on to this level, a bit indecisive. However, the longer that it hangs out there, the little bit more worrying it's going to be, because the VIX is holding on to its bullishness quite clearly. It's not letting go of that bullishness. And I'm not sure what this is about. This is a little bit strange for the VIX, okay? Like, this isn't its normal behavior, but we're gonna see, because it might have a punch up to 40 and then before coming down. And so just continue to watch this space. The VIX hasn't given up yet, and the VIX can be as powerful as the DXY in these markets. But and you do see the stock market is fairly repressed right now, and that is because most likely the VIX continues to be pushing up, And so even though the dollar is coming down, you're not seeing relief in the stock market right now. And I believe that's because the VIX is working against us. Very rare for us to see the dollar and the VIX out of sync in the recent weeks, in the recent months. But in this case, something different is happening, and there's a divergence between the dollar and the VIX. So continue to watch this space. USDT, of course, this is applicable for crypto, just continuing to chop around between these two lines. We are getting a little bit of that squeeze to the downside, but the 9 EMA is still flat. So we do want to see not only us below the 9 EMA, but also for the 9 EMA to put in a negative trajectory. And as long as it holds flat, there's the potential for us to bump up here. So, guys, this is just a bullish pullback at best. Maybe we could come down to 7.3% if this does continue to push, and that would make trading just a little bit easier. So, the DXY, the VIX, and USDT leaning uh, leaning bearish for themselves, but that would be bullish for the markets. Okay, so leaning in that direction, just giving us a little bit more hopium, guys. Okay, so don't be a perma bear, don't be a perma bull, just be a clever little alpha monkey, and we'll work through this together. And guys, yes, unfortunately, I hate to tell you that sideways is a direction on the charts. Okay, like we can go up or down or sideways, and the reason why we have been going sideways is because we're consolidating. We're consolidating, guys. We're having volatility contraction, and at some point that is going to pinch off, and we're going to have volatility expansion, right? And then only an idiot moon boy and only an idiot doomsboy is going to tell you that we absolutely can only go up from here, or we can only go down from here. It's all about conditions, and that's why I give you key levels to watch so that we can validate them with 4-hour, with daily candle closings, with whatever their time frame is, candle closings, and then having a confirmation, we can suggest that there is a statistical likelihood that we would explode in either one direction or the other. But so long as we're just contracting in volatility on the daily, unfortunately, contraction does imply sideways action. Whether you like that term or not, it doesn't matter. The charts don't care what you like. And so we are just hanging on for yet one more day. And if we close here in about 1.5 hours, then we will have confirmed surviving for another day. A little bit more bullish than the last 2 days on Bitcoin. CME has a chance, but otherwise, same as the last couple days. Ethereum, not as strong as Bitcoin, but doing okay. It has a decision to make. This is a bit weird looking. And then Ethereum CME feeling a little bit weak, but making a nice try here. Again, it has CME actually already closed, so yeah, I mean, this thing is going to have to make a it's going to have to make a decision here, whether it loses the 4 or not on the daily. So we're going to have to just keep watching this. This is so borderline, guys. This is so borderline. But overall, it is still above its daily momentum zones and the 2-day Stokes zone. So definitely it survives another day. And then stocks just looking ugly, but also surviving yet another day. Right, both the S&P and Nasdaq, but just very, very weakly and nowhere near where I would like to see them. So that's a little bit distressing. Let me check our volatility. Um, Volatility here. Yeah, we are starting to transition on the S&P. Man, this is such a funky looking What the heck? Okay, so maybe the 2-day is going to be more important. Let's look at the 5-day. Yeah, we are gonna just wait to see where the Nasdaq pinches off here. If it continues contracting, or if it pinches off, and then we can take a look at its volatility play. Ooh, wow, why? This is so different. Okay, so the S&P a bit different here. Well, I'm just going to have to play this by ear. Um, and use our momentum because the volatility on the stock market just is kind of baffling me, guys. Kind of baffling me. Let's just quickly jump through some possibilities of divergences, and let's see on Nasdaq. We have the divergences that we've already talked about for quite some time. We do have a little bit of a drive of bullish divergence on the 4-hour on the NAS 100. The weekly on the S&P has a couple drives, but coming back down into the bearish control zone. 5-day. Let's look at the daily. Several drives on the 16-hour. Let's look at the 4-hour. Also a bullish a drive of bullish divergence on the S&P 500 on the 4-hour. Couple drives of bullish divergence on the 1-hour on the S&P. So we are starting to build up these drives of bullish divergence in the bearish control zone, and that would lend me to start to bias for a possibility of a turnaround. So I'm just going to watch this space on the stock market. Let's do the same thing for ETH. Weekly, we already know that one. 12-hour has a couple drives. 6-hour. 4-hour. Let's look at Ethereum proper on the weekly. Let's look at our 2-week. The 2-week structure for Ethereum's RSI is looking pretty interesting, guys. I would still expect us to fall down into this area, but perhaps this drop satisfied that. So I'm either looking for a breakout or I'm looking for us to drop into this zone. Weekly. Oops, 5-day. We do have that drive on the daily, 16-hour, 12-hour, couple drives on the 12-hour, 6-hour, several drives, but a little bit bearish also. 4-hour, many drives, but we did pump, and now we're starting to get bearish drives. So ETH not looking as strong as stocks at the moment, or at least in terms of divergences. Let's go over to Bitcoin Professional Exchange. Again, the weekly just looks really nice, guys. Look at this 2-week. Like on the 2-week, we're starting to break out actually, and so I don't know what to say about that, guys. It's just I told you I was monitoring this, and I was suggesting that we could drop down here. Let's go to the BLX actually. Yeah, the BLX doesn't really show what I'm seeing on CME there. So, but getting dang close, guys. Yeah, let's pay attention to this. I don't know, guys. I may have been correct in my projection of this is the bottom and this is the confirmation. So just keep watching this space. There's not much room to navigate here. I mean, we could dip down as low as here, sort of like we broke under the green line back here, right? And we kind of wicked down right here. Like we could get down into this area. Like we could have one more drop. But this is pretty tight here, guys. Like again, like we're talking about low risk areas at this point. Anything under 20,000, pretty low risk areas. Anyway, I just wanted to get a big view because the BLX has much more price action, but it's not updated on the daily. So let's go back to BTC CME, and we are getting a breakout on CME. So guys, don't be over bearish. I mean, this is something that could be important, so pay attention to this. This is a 2-week breakout, and this is going to close in 7 days. So it's not confirmed yet. We have 7 days. This thing could just drop back down, okay? Like this could be a fake out. But in 7 days, we might confirm a breakout on the 2-week RSI on the professional exchange, on Bitcoin professional exchange, basically like the stock market. So this is very interesting. And I don't know what this line is. But yeah, that's very cool to see. Let's look at the weekly. Also threatening to break out on the CME. Well, this line isn't really meant for the weekly. For the weekly, we do have more room to run. So this isn't a done deal on the weekly. Let's look at the 5-day. 5-day, there is significantly more room to run. So I don't know. The 2-week is such a long period of time that it could mean that there's just more price action in play. So these lower time frames aren't 100% ready yet. Let's see, the daily. Daily also not there. So for Bitcoin CME, the 2-week looks like it's ready to break out. The other time frames are looking like they need just a little bit more preparation. So it depends on what time frame you're trading on. But let's go ahead and pay attention to these divergences. We do have a couple drives over here on the 16-hour. Let's see. Let's look at the 12-hour. 12-hour, a bunch of drives of bullish divergence. 6-hour, 4-hour, kind of building up there. This is the 1-hour. Let's go over to Bitcoin proper, the 24/7 exchanges. And on the 2-week, on the 24/7 exchange, we are not breaking out yet. So this is different than the CME chart. And again, this implies that we could drop down a little bit lower, kind of fill in the tip area right over here. So not sure if CME is telling the truth or if the rest of these charts are telling the truth, but it is nice to see that breakout on CME. That is interesting to say the least. Let's look at the weekly for divergences. Let's look at the 5-day, a little drive there. The daily, couple drives. 16-hour, yeah, that's a lot of drives in the bearish control zone. I mean, maybe we do pop up, guys. 12-hour, many drives here, guys. It's just one after another. I mean, it tends to build into momentum, okay? It just whether we can actuate that into the volatility, that's the question. Yep, 8-hour, 6-hour, 4-hour. All right. So the stock market has a couple bullish drives of a divergence on the 4-hour, but not really seeing the same thing on Bitcoin or Ethereum. So we are just looking for their key levels. Guys, the 24/7 exchanges do close in about an hour and a half. So you can see we're pushing down right now. We're pushing down and we're losing some of these levels on Ethereum. But Bitcoin holding strong. And stocks just way under where they need to be. Just way under. But DXY in our favor, VIX and USDT a bit undecisive, USDT leaning in our favor. And then if we just flip through our altcoins really quickly, again, all of them are just threatening to break out of some type of formation. Right? Many of these formations can get extended because of the sideways action that we've been having. We can just redraw them. Some of them holding on very weakly. Wow, some of them just falling off of a cliff like Flux. XRP had an astounding pump, guys. Look, it hit my green box perfectly. And then it took off, man. Boom. 20%. Boom. Man, that green box, bro. And look, I was thinking it was going to take a slow path down, but that thing just chose violence, guys. It chose violence. Looking fairly bullish, of course. Anyway, nice play by XRP. Guys, I'm going to finish it there. Um, Again, we survive another day. I don't see any obvious setup, but we are getting a little bit of a bullish setup on Bitcoin, not so much on Ethereum, but it will probably follow Bitcoin if Bitcoin does have a bullish setup that carries out. It has not been validated yet. There's no confirmations of a clear setup for that. And then the stock market looks horrible. But the dollar looks in our favor. So kind of mixed assessment for the for yet another day. Sorry about that. It's just that's how it goes sometimes. You want to wait for the obvious setup. You don't want to necessarily just be taking any play. But this is looking interesting on Bitcoin. Watch this space. As your alpha for the day, stay safe and happy trading.